to be about NQ trading strategies. NQ is for the futures trading, and that's what we're trading here. And this is Tradeovate. So what I have on here now is the DOM, Super DOM, the positions, and all my mapped out levels, these lines here that I use as key support or resistant levels or liquidity levels, whatever you want to call them. And these orange dotted lines align up with your New York time frame, the first 4-hour candle highs and lows. But the most important thing that I want to talk to everybody about today, and something that I noticed over the years of trading NQ, is the NOM VWAP bands. And so you can find that here in your indicators right here. And if you don't have it, then what you want to do is explore indicators here and then install it. And this will pop up a bunch of indicators that you can go ahead and install, and then go ahead and refresh your page, and you can add them on. Now, the one strategy that I'm going to teach today is going to be about this middle VWAP, which is on your NOM right here. This is the middle equilibrium, middle VWAP resistance level, support or resistance level. And so the number one trading strategy that I use every morning that works for me is using this middle VWAP. And I want to explain it so everybody can be very crystal clear on this strategy. So when market opens at 8:30 a.m. Central Time, okay, market opens. What happens if you notice? Here, let's go to the 1 minute. You'll see it better. So if you notice what happens when market opens, here market opens at 8:30 right here. So we're actually above, well, we are right on the VWAP. As market opened, boom, we come down, we opened on the VWAP. And so what you want to do, and what this trading strategy is all about, is determining, is price going to stay above or below VWAP? Now, since market opened right on VWAP, you definitely want to wait until it retests over here. So as market opens, boom, bounce off VWAP. If you know what you're doing, you could have rode it once it got it back up above, really quick. Because when market opens, you really don't want to hold those trades but a minute or two. You really don't want to hold, trades too long when market opens. You want to be in and out. Now, fast forward, it came back and touched 12 minutes later. Okay. Now, this is where you need to start looking. Okay, are we going to bounce? Is it going to hold VWAP? So this is where you want to determine right here if it's going to hold above VWAP. Okay, so I never recommend getting on the first 1 minute candle, because since we're on the 1 minute time chart, I always recommend to wait 3 candles. So 3 candles after it touches VWAP. So this was 1. Okay, so this would be 1, 2, 3. Now, on the third candle, since we were below, you wouldn't want to get into a buy. You're below VWAP. But when it came up to retest VWAP here on the 1, 2, 3 on the fourth candle, and it plowed through, this area is where you're looking to either get a buy or a sell. Now, I would have got a sell if we would have had a wick right here, a wick. Okay, if we would have got a wick right here, I would have got into a sell and then wrote it down. But because it plowed through, okay, and then we engulfed this red candle, this green engulfed it right here. The minute you get back above and you engulf this area right here, this body, you want to be getting buys. And so you'd want to get a buy here, and you'd want to put your stop loss. I like to put it right underneath the bodies. Some people do the wick. For me, in this situation, it would have been the body because the wick is just too far down. So I would have had to stop here at the body, or you could have even, with a tighter stop, you could have even, used this area right here for this body. Okay. Now, when you hit this trade in the morning, okay, this trade always hits the first 9, 12, 13, 32 minutes when market opens. Okay, I would call this the middle VWAP trade. You wait for price to come back down and test VWAP twice, okay, maybe 3 times, but usually by the second time is when you want to enter your trade. It may even come back down a third time and hold and bounce, but in this particular situation, this would have been, if you would have got into this trade right around this area, this would have been 70. Now, when it tops out the first time, I usually never try to sell here. I always try to wait for the second top out. So I probably would have sold, somewhere around here or here. So this would have been, let's see, 70, say we got in at 270, all the way up to, let's just say right about here, 388. It's about a 100-point move, a little over if you play it right. Okay, so this 100-point move, one contract, what's that, $100 for every 5 points, do the math. Boom. Okay, so if we back test this, let's go back to yesterday. If we back test this, let's see what happened. Okay, yesterday, market opened 8:30. Market opened at 8:30 right here. Okay, look. So we were above VWAP. Market opened. And we came all the way down here in 5 minutes. Okay, we bounce. Boom, boom. Okay, so I probably would have got this trade right here. I probably would have got this second one right here on this second bounce just for a quick snipe and rode it up here to the next resistance zone. Since market had just opened, it's within the first, 5 to 15 minutes, I'm in and out of these trades. So I probably would have got this sold right around here. Now, as you see, market open, we came down, we bounced, we rejected, couldn't get above any of your moving averages. This is the 50, the 40, the 30, the 21, the 9, or the 15 and the 9. Okay, we couldn't get past. Every time we can't get past these or can't even wick above, I know we're going to come back down. Okay, so what happened was we came back down and we couldn't hold. We got weak here. So this was 9 minutes into market open. Bounces back up, rejects on your 9. Once you get this rejection and it comes back down under VWAP, around this area is where you want to get into sells, because you reject, you fall, and you can't get back up. So around here is where you want to be getting into sells. This is 15 to 13 to 13 minutes after market opens is where you want to place your first sell. And then for me, I would put a stop loss right here above this wick right here. So at like 94, 25, 94, 95, because, it could potentially get right up into here and reject. You could even put it a little higher above your 50. Okay, just to keep that trade going. And that would be 64 to 93. That is a kind of a tight, or a loose stop loss. It's a lot of points. You can put it by the bodies. Is another good place to put your stop loss, where these bodies are right here. Boom, boom, boom. Could be another good area, or if you have a good margin, you want to let it ride right around here. Okay, but this is where you want to start looking to getting into trades. This gave you another perfect good opportunity right here. What was this? 20 minutes into trading. Now, when you see this wick just doesn't even slice through at all, middle VWAP, this for sure is telling you we're coming down. And the safest thing to do is to ride it to the next liquidity zone or resistance level or support level, which would be this lower VWAP. I call this the middle lower VWAP. So from here to here, how many points is that? You're looking at 65, 64 to, that's about 60 points right there. That's a good trade, and then boom, hold support. It comes up a little bit and it keeps this perfect kind of downtrend all day. Now, when you get into this lower middle to lowest VWAP area, when you stay in this zone, these two zones, you're in a downtrend. It just is what it is. Okay. When you're in this zone, these three, okay, this is range. You usually range when you're in these three. And then when you're in these upper two VWAP zones, then you usually, trend upwards. So always keep that in mind when you're trading. If you see here, we were in this zone here, this range right here. We didn't necessarily come all the way up here in this area. We stayed under the 200, but look, this was your range until you had a break down. And this, right when you break under this lower middle VWAP, which happened next day, okay, boom, you keep going down. Now, another thing that I noticed, okay, when I'm trading is that you see this lower VWAP here and then this upper VWAP right there. See, this was for the previous trading day. I noticed that when you break below the previous day lower VWAP, you always go down 50 to 150 points, some cases 300 points, but you could for sure get 50 to 150 points every time. So look, we broke here. Okay, we broke here. So let's see how many points we got. We got 25, 262 to 25, 115. So 260 to 115. So how many points is that? You're looking at, what's that, 100, 260 points? 260 to 115. So 160, that's 100 points. That's like 200 points. more or less. My math is off, but I mean, you get the point. Look. Whew, look at that. Right here was probably 50 points. Let's see. From here, so 65 to 30 to 60 to 230. Well, 30 points. 30 points for sure go, and then boom, all the way down there. Okay, so now fast forward. Always mark out these VWAPs. So that's what I did. I always mark out the upper VWAP of the previous day and the lower VWAP. Okay, I'm gonna mark that out, and I make it blue. So I can have that, because I know if we get below here, it's over. We're going down 50, 150 points, 200 points, into my support levels right here. But anyways, that's the VWAP trade. That's the middle VWAP trading strategy that I have, and a little bit more information on VWAP and how I use it to trade. I'll put out another video on what to do in between these zones and how to trade it. So that will be part 2 of your VWAP training video. I hope this helped. If it did, leave a comment. If you got something rude to say, don't leave a comment. And I hope this video was helpful. On to the next.